Hello guys, welcome to Wealth FX and I remain your host Mr. Babs, and today I'm going to be teaching you a very important price action trading concept which I call market structure. Now, why do you need to understand market structure? Well, markets always moves in three particular directions at any point in time, and I'll be talking about those three important concepts in this video, so be sure to stick to the end. Now, the first one, which I'm going to be talking about, is the uptrend. And how do we identify an uptrend? Well, we identify an uptrend when you have price move in this manner. We have a low, and then we have a high, and then a new low, and then a new high, and then a new low, and then a new high. Yeah, and then you have a new low, and then a new high. Now, for every chart, when you are able to connect your lows and your highs, this is what we refer to an uptrend. Uh, so as an uptrend. And now in this video, how do we identify uptrends? When you keep having higher highs, you keep having higher highs, you keep having higher highs and higher lows. Now, the more higher highs and higher lows you have, the more um, bullish that trend is, and then another high, a new higher high. Now, price will keep breaking these structures as long as you are in an uptrend. You keep seeing a new higher high and then a new higher low. Now, this is the characteristics of an uptrend. Now, on the other hand, we have a downtrend. Now, how do we identify the downtrend? Now, in for uptrends, we said we have higher highs and higher lows. Now, for downtrends, what we have is we have price moving a low and then a new low, which happens to be lower than the last swing point, and then a lower low, and then a lower high, a lower low, a lower high, a lower low, a lower high, and so on and so forth. Now, the more you keep having lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Now, this is actually a characteristics of a downtrend. And now, when you see this tells us that, oh, of course, price is probably moving towards the downside, towards a sell direction. Now, if we said price moves in three phases, which is the uptrend, the downtrend. Now, what is the third one? The third one is what we refer to as a range. Now, a range can be identified when you have price moving within a particular zone. Now, let's assume these are our zones, and for some reason, price does this, does this, does this, and then gets to this point, gets to this last swing point, and now instead of breaking, it does what? It does a reversal and begins to sell. So as long as price stays within this zone, you are in a range, and then you keep noticing whenever price comes to that same area, that price tends to react. Now, the thing about this is the best place to be when you're trying to trade the market is to trade with the trend, because every trend gives you two waves. We have the impulse wave and then the corrective wave. Now, for an uptrend, that means our impulse wave will be the long leg, while the corrective wave will be the pullback. and then another long leg, which is the impulse wave, and then it pull back, and like that the trend continues. Now, if you want to be trading with the trend, the best approach to this will be to pay attention to corrective zones of reaction, where price tend to correct the pullback and continue in the original direction. Now, the beautiful thing about understanding market structure is, the more you understand the market structure, the more it is easier for you to place your positions and bias. Okay, and what do I mean? If I am trading with the trend, because I am going to be looking to catch the impulse wave, which is this long move, I have a huge or a higher profit margin and rewards potential, as compared to if I was trading against the trend or trying to catch the pullback. Now, it's not impossible for you to trade against the trend, but then it is safer to trade with the trend, because that way I can risk a little amount and then target a larger profit margin or profit reward ratio, rather than trading with the trend where there's a whole lot of you know uh imbalances in the market. Now, the thing about trading against the trend is, most times the pullback takes longer than the impulse move. Now, what do I mean? If you look at this chart on my screen, this is gold chart, you find out that because this is an uptrend where we have higher lows, we have a higher high, we have a higher low, another higher high, higher low, another higher high, a higher low, and then the trend continues. Now, if you pay attention to this, what you find out is, for the impulse move, it happens in more candles than the pullback, because the trend is bullish. Now, if I was to show you a bearish version or a downtrend, what you would observe is your impulse move would now be longer than your corrective move, which is, you have something like this, the leg, the pullback, the leg, the pullback, the leg, the pullback, the leg. Now, of course, this is where you have your lower high, and yeah, the next zone will be your lower low. Now, if you are trading with the downtrend, you want to make sure that your target or focus is trading with the next impulsive move, that's the next long leg. That way you have a little bit of risk and then a larger reward potential. Now, for best option, or for beginner traders, or for even everyone who is looking to make more profit, it is advised to trade with the trend, and then most appropriately stay away from the trend when you are in a corrective waves. Now, there are a whole lot of concepts that you combine together when trying to, take your entry positions. When you see your lower high, what's the best approach to enter? Now, you want to make sure that your lower high happens to be around probably maybe a liquidity zone, which I'm going to be talking about in another video, definitely not in this video. You want to make sure your candlestick confirmation is obvious. Now, when I say candlestick confirmations, I mean, which of the candles are you paying attention to increase your bias on what direction of the trade? Now, if at a lower high, you observe maybe a bearish engulfing candle, for a downtrend, you observe a bearish engulfing candle, or you observe an evening star or a pin bar around your lower high. Of course, this will give you a stronger confirmation that yes, the market is finally exhausted and is starting to reverse in the original direction. Now, most people mix up the concept of trying to trade trends and scalping. Now, the good thing about trading a trend is in one swing, you can as well catch multiple scalps options or multiple small position trading. So that way, I do not need to be under pressure. All I just need is to identify the right zones, and when I have that, it's easy for me to set my trade in the direction of the trend. Now, the best positions to watch out for when trying to trade the trend, like I said, for a downtrend, is you're watching out for the corrective zone, which is the lower high for a downtrend, and then for an uptrend, it is the higher low. Now, the thing about ranges is it is not impossible to trade a range, but then it is only kind of technical or advisable to stay away from the trend when you are in a range. Now, the reason is because most times there's a whole lot of choppy movement in between the resistance and the support zone. Now, but if at all you decide to trade with trade a range, for instance, then your focus or your bias will be to enter a sell at the resistance of that range, and then probably look for a buy at the support of that range. Now, it is best if this range happens to be probably maybe around your demand zone, and you look to buy, and then for sell trades it is around probably your supply zone and you're looking to sell. Now, this is just basically a textbook version of some of this. Now, I showed you the trend for gold, which is this is a monthly chart for gold, and of course, you can identify the higher lows and the higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. And now, the more you keep seeing higher lows and higher highs, that tells you that this trend is continuing in the bullish direction. Now let me see if I can show you a bearish version of this chart. Now, what would a bearish version look like? Now, a bearish version, okay, let me use the swing. For instance, you're going to have your low, first of all. You're going to have your low around this area, and then you have your break of structure here, and then you have a higher low, a higher high, sorry, a lower high, sorry, and then a lower low, a lower high, and then another lower low, and in between somewhere here you have your lower high, another lower low. And if I expand this chart, probably go to the daily or the weekly chart, you find out that this same pattern continues to repeat itself over and over again. So of course you want to trade with the trend using this concept of the uptrend, higher highs and higher lows, and the downtrend, lower highs and lower lows. So I don't want this video because our approach with WealthFX is trading made easy, simplify trading concepts as much as possible. So yes, this approach has actually helped me to increase my profit potential and profitability margin by a large percentage, all because I understand how to identify the trend. So I'm going to advise you, the more you do it, the better you get at it. So why not take the time to drop a chart on any of the commodities or pairs or forex, forex pairs, and then when you drop the chart, try to identify what direction is the trend moving. Is it moving upward, is it moving downward, or is it in a range? Now, like I said, the uptrend you keep seeing higher highs and higher lows. For the downtrend, you keep seeing lower highs and lower lows, and for the range it just stays in the middle. So bringing it all together, this is what you have. So you literally have your, let's say, your support zone or demand zone, and then you have your resistance zone or supply zone, and then you notice price keep making higher low, higher high, higher low, higher high, higher low, higher high. And then by the time it gets to this area, you then start to see maybe some form of range, it just stays in that same area until there's a break of structure, a new lower high, lower low, lower high, lower low, lower high, lower low, and then that's the correction.